If I were to ask you what the largest publicly traded car companies are right now on the market, you'd probably say like Ford, Tesla, GM, Porsche, Mercedes-Benz, maybe even Rivian, but they're kind of smaller. But just a few days ago, there was this tiny company based out of Vietnam that became the second largest car company by market cap out of every company in the world. So in this video, we're going to be diving into exactly what VFS is and why it went on such a monstrous rally from like $31 per share all the way up to $90 per share. And most importantly, how I was able to trade it with an awesome dip buy at $41 per share and held into those $90 highs. So if you're a day trader or a swing trader, be sure to stick through this video because there are some amazing lessons to learn about how to swing trade these crazy moves. So if we want to get to know more about exactly how this company made such an explosive move, we first have to understand an important concept in markets called a reverse merger. So the traditional way for a company to go public is they go through a whole process called an IPO, initial public offering, where they basically find an investor, they find a backing banker who will underwrite them the ability to sell shares into the open market, and that is set as an IPO date and price. This is usually a big event. They get to ring the bell at the NYSE or NASDAQ, but this process costs a lot of money. And of course, companies that are trying to get their footing in the ground and they're still not established yet, they don't really have the money to spend on an IPO. So instead, what they could do is they could go find an existing company that's just kind of like a shell that's already traded on the market, and they could choose to merge with them, essentially getting access to the public markets by merging into that company. And this is typically called a reverse merger. Recently, though, there was kind of a new wave in the market, which are called SVAX, which stands for Special Purpose Acquisition Company, which are basically purpose-built companies that are just shells that are mainly developed and kind of created for the purpose of accepting reverse mergers into them. And that's basically how Vinfast or VFS became publicly traded on the market. At first, the SPAC that was trading behind it was called BSAQ. This had some action leading up to the IPO because people were anticipating the merger, but this is basically how the merger went through. So knowing that this company started out as BSAQ, I think it's important to kind of look at the filing just to get a feel for what the market structure or what the share structure of this company looks like. And you can see here that Vin Group, the company that owns Vinfast, own about 2.3 billion outstanding shares of this company. So it's a massive outstanding shares, right? But the publicly traded float is only around 17 million shares after the reverse merger happened. So massive outstanding shares, right? 2.3 billion. So that's technically the value of the company is multiplied by that. But the actual float, the amount that can be traded by the public, is only 17 mil. And so that's exactly why a few days ago, as VFS was surging and squeezing to new highs, we were getting articles like this from Bloomberg saying that their value, their market cap was surging above $200 billion, going past EV makers and even companies like Goldman Sachs and Boeing, when obviously this company is worth nothing like that. So that's just kind of like the background knowledge, who really cares about that? What we're here for is actually the chart and the trade that I took on it. Like I said, I was able to buy VFS. I did get in a bit late, but I had a really solidly planned dip buy at $41 and I held it for 3 days into the $90 range. I sold some at 90. Admittedly, I held a bit too much and I got out the rest in the first red day following that. But let's kind of jump into this and let me explain how I found this entry and more importantly, how simple it is to find these. There's no indicators, no crazy MACD crossover, none of that. Just simple support resistance trading that anyone, and I mean it, anyone can see this on their chart. It's just a matter of having the patience and having the confidence to execute on it. So if you're not familiar with this concept, please be sure to go watch my past videos because I talk about this nonstop. But basically, my trading strategy boils down to this idea of using previous resistance as new support. So very simply, this is a multi-day mover. So I'm going to use the hourly chart. And we can see that back here, right? You can see this top here, big volume, had previous resistance right near $41.58. I'm going to draw a horizontal line there just so I know that, hey, whenever this breaks out, I'm going to look at that point, for an entry point, right? I'm going to use that previous resistance as new support. But then you can see during this day, we had this big gap up. The stock gapped up above that. It broke out to new highs. So when that breakout happened, I knew that, hey, I know that that's a point that I want to buy. I'm going to send orders to buy there. I'm going to have limit orders waiting out there to actually get in long. And sure enough, you can see after a couple hours, the market pulled back. It bounced off of it pretty much perfectly. You can see the low of this candle up there, $41.62. Pretty much bottom. You can see the top of this candle here, the actual resistance, it's at 41.52. It was off by 10 cents. With a $40 stock, that's like 0.001% difference. It's nothing, right? It pretty much bounced off the support perfectly. After I got that entry, obviously I had my plan to lock in first partials into the next resistance at 55 bucks. Stock squeezed up, gapped up. I locked in some more partials. And then from here, it was just a matter of, okay, I'm going to keep on using, as long as previous resistance keeps on holding as new support, I'm going to keep holding it and we'll just see how far this goes. It's in new all-time highs. It's a very restricted public float. It's getting all the headlines. It could easily go upwards to $100 per share, and if not higher, if shorts keep getting trapped. So we're going to jump into the 5-minute chart just to kind of break down the price action. And you can see with each level that was broken out, it kept on holding very clean previous resistance as new support. You can see this level here as 60 bucks, had that as an obvious resistance, broke clean through it and never retested. Then it set this new resistance near 70 bucks, broke clean through it, never retested, held right above it. And then upwards here, it got near $85, $90. You can see here around 90 bucks, it was kind of struggling. It had some failed breakouts, as far as I was concerned with this chart. But my assumption was that with how clean this breakout looks, after it crosses over 90 bucks, it should easily break out. But it didn't. It kind of stuffed into it, had a long top wick, got a lot of selling there. And that felt like a failed breakout to me. So when I saw that failed breakout, as it was falling back down through VWAP, I chose to sell off a decent chunk of my position into this VWAP as resistance. It's kind of a more, it's not straightforward process, but of course, with all my trades, I break them down thoroughly in TradeBuddy. So there's a lot more in-depth analysis there. We don't really have time for that. And then from there, I was like, okay, great. It kind of looks like it's topping, but overall still holding previous resistance as new support. So I'm going to hold it overnight. But it did seem like it had potential for a red day. Then, of course, next day came around, it gapped down, was showing a lot of weakness. And I started to sell off some more shares. I should have sold the rest here when it broke down and bounced into 60 as resistance. That would have been a really good exit. I sold some there, not all of it. And then once it crossed down through 55, I stopped out of the rest. So I could have done better with it, but overall, I'm very happy with the swing trade. And I guess the most important lesson for this trade as far as entry was how simple, as long as you can focus and really dial in your entries on A+ setups, you can mess up the exits like I did here and still walk away with a pretty good profit, right? And still be happy with your trade in the end. So it really is as simple as waiting for previous resistance to hold as new support. If you're trading a stock that's moving on a multiple day time frame, like VFS was, don't focus on the 1-minute chart. It's not relevant. Look at the hourly chart, look for those key breakout points, watch them pull back and take the risk into those pullbacks to try to get a good entry. Obviously, it doesn't work all the time. Have your risk planned, know where you want to stop out just in case things go wrong. But that's my lesson for VFS today. If you have any questions about this, please let me know down below. If you traded VFS, even if you took a bad trade on it, let me know. I want to hear your thoughts and I want to hear your experience. Hopefully I can give you some feedback in the comments on how to do better on the next one. With all that in mind, if you enjoyed this lesson, give me a thumbs up for the YouTube algo. If you want to see more videos, I have over 300 videos on my YouTube channel. Go watch those for great free trading content. And I'll see you in the next video.